Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Afternoon. Okay, so today, you saw what happened over the weekend. Now, remember, this rally that we've been having is not what people really, it's not what they think. They think that this rally will just keep going on forever. And it just, I go back to Micron in December, right? When we had that rally, when they had the earnings, right? Remember that? And then I go back to last week and I look at, Taiwan Semi. They had it big red, but that MU in December and TSM in last week, those are pops. Those are rallies. But as I said back then, when they happened, you got to stop thinking, oh, that fixes what's ever broken in this market, and it doesn't. So we have a lot more problems. We have the valuations. The valuations are terrible. They're too high. The pricings are stretched. We have Iran, and over the weekend that heated up again. We have Venezuela. We have Ukraine. So what I'm saying is just because, and remember, when that December rally hit MU, and if you recall, we were down almost, either about 30 days to 90 days on 9 of the 10 software stocks, and we were down 5 of the 10 of the chip stocks. Now, that's not a good record. We were down. So just because we had 2 blowout stocks with earnings, and they made such a big deal of it, it's not what you think it is. So, and if you look at our valuations, that's a big problem. Price valuations are stretched. If you look at our China, okay, China is blocking the high-end chips, NVIDIA, especially NVIDIA. We have, besides the valuations that are stretched, we have another big problem. We have the geopolitical problems. So those 2 stocks, those 2 earnings that went nuts, they didn't change our Iran problem, our Venezuela problem, our Ukraine problem. I didn't see that change. I didn't see it change the fact that China's out there blocking our high-end chips, i.e. NVIDIA. I didn't see that stop, did you? I didn't see that we have one of the worst deficits in history right now. Why? Because remember what's going on. We're at 5.3% of our GDP. Historically, for 50 years, we're at 3.8% of GDP. That is really dangerous. That's why we get downgraded. And then let's talk about not only deficit, let's talk about the tariff worries. So they're escalating, especially over the weekend. I mean, here we got Trump threatening 8 NATO nations with more tariffs. UK turns around, tells us they're going to retaliate. Now we're waiting over our head. We got the Supreme Court decision with these tariffs. So there is a stock opportunity in all this, and I'll tell you what it is in a moment. But you got to remember, this is a tough deal. And the other thing that's interesting is, yes, the chip stocks are doing well. There's no question about the chip stocks. Bank stocks are iffy. A couple banks are doing well, other banks were shorting. And I'll go over those with you in a moment. So usually bank stocks like high yields. They make more money on higher yields. But right now, it's really mixed. And let's talk about the chips, okay? Now, we have some good news in the chip stocks. They've been rallying, a few of them. Micron Technology. And the other ones that have been rallying, here, I'm going to go to my chart just to show you for a moment. If it wasn't for these stocks, this market would be in a total collapse. So if we go to our, let me see if I can get them here. Let me get my chip stocks here. Here we go. Let's go to the chip stocks first. Oh, by the way, if you look at our metals, I mean, those are going beautiful. I mean, we've made a ton of money in metals. We've been in those metals for a year now, okay? But look at that. Barrick and the best one we've been in for a year been GDX. That's been terrific, okay? But let's go back down to, I want to get to the chips, because everybody's been emailing me about chips. So let's take a look. So the only place that's doing well, you have the semis. You have Micron Technology, very good, doing relative strength, has a lot of relative strength today. And that's the beautiful thing about a day like today, okay? And again, this morning, it was interesting. At 3:30 in the morning, the futures were down 800 points, over 800 points. And I'm saying to myself, I wonder when the plunger team is going to come in. Now, the plunger team, again, are three players, okay? And the plunger team, that group, will decide if the three players will start coordinating and push the market up, okay? And so you have the big players, which are your J.P. Morgan, Goldman Sachs, Citi, Bank of America. They start buying stocks. They're the Fed's dealers, so they start buying stocks. Then you got the futures desk. They start buying index futures. And then you got the big boys. You got the arbitrage players. And as soon as the investment banks start buying, and the stock market starts, stops going down so fast and slows up a little bit, and the futures desk, all of a sudden, because of what they're buying, slows up, automatically what kicks in is a robotic buying machine that buys a tremendous amount of stocks, so that it makes all the shorts have to get out. They squeeze them. They have to buy their stocks back. So this morning I saw from 800 points, 830 points went down to 6. And then all of a sudden now we're back to 9. So there's some real serious problems here, because obviously they're not getting the word to jump in here like they did last week and start take those three players, get them together, and start flipping the market around. So something must be very serious here that's not happening. But going back to the stocks, if you look at TSM, we got relative strength. Okay, we got Boo, we got relative strengths. They're not set up for shorts yet. Intel has relative strength. Okay, AMD has relative strength. But then you got, and the strongest ones really are your equipment machine makers, the people who make the machines they sell to Micron and TSM and Intel to make chips. So these are the strongest, your ASML, your AMAT, we're in all these, CLAC, LRCX, those have tremendous relative strength, and that is where you should be in the chip sector. Maybe you get into MU, maybe you get into, stay with Intel, stay with TSM and MU, that'd be about it. Other than that, I would stay in the equipment makers, okay? That's where they are. Now, when you go down if you go down and you take a look at the banks, it's a mixed bag with banks, okay? You got J.P. Morgan, we're shorting that right now. Goldman Sachs, pretty solid. Morgan Stanley, pretty solid right now, for now, okay? Citi, okay, it's not solid anymore. BAC is a short. Wells Fargo is a short. And when you look at your regional banks, really, the only thing you have there is USB has relative strength, and so does PNC. But overall, the regional banks, like for example, COP, we started shorting that today. So there's a mixed bag in the banks, and there's a mixed bag also with the regionals, okay? But the regionals right now have a little more relative strength, like your Key Bank and HBAN, so you got a mixed bag here, okay, is what I'm trying to say. You got a mixed bag. So overall, the reason why the chip sector always seems to do well is because they're driven by AI chip, okay, memory and demand, okay? They're driven by this memory demand, and there's a shortage, okay, of these chips. And the memory chips, the prices are exploding, and the chips have, they're treated like industrials, okay? So for now, the chip sector, a few stock, and the people who make the machines and sell them to the chip makers so they can make chips, they're strong. So there's only a little select group that's strong. But so the sector is being right now being pushed by fundamentals. They're not interest rate sensitive right now. So, and then we got another big problem. We got yields that are spiking, and you got the 10-year Treasury yield spiking. That's not good, because once you hit that 10-year, that yield starts spiking. You're talking about recession. Okay, people start getting worried about recession. So there's only a few gold, the metals. That's where you got to be. But I want to play something for you. These guys, these jibber jabbers, these people are nuts. Listen to this crap.
There's a very broad and real sense in which the hard economic data, real figures, not surveys, are showing profound strength.
No, they're not. That's not true. Are you kidding me? Listen to this.
The survey data is quite poor in many areas, but that hasn't been a good predictor of market returns in recent years. What's been a much better predictor is the real economic data, and on that front, we're seeing some of the strongest levels in years.
Not true.
A lot of investors are concerned about valuations in AI and about the incredible returns and whether they can continue. Our analysis suggests that the analogies people like to draw with past bubbles and past periods of real volatility may not be a good indicator for today.
Look, the truth is that we have a situation right now, okay, that everything he's saying is just not true. We have too much that is overwhelming this market. It's just because there's a couple stocks, a handful of stocks, handful of chip machine makers, handful of, not even a handful of the tech stocks. But how do you get away from, okay, Micron had a big pop, and Taiwan Semi had a big pop in earnings, so we're just fantastic. Buy. But those two stocks popping has not in any way fixed the problems we got. Just not. They're not fixing our valuations. They're stressed. The prices are stressed. What's going to go on with Venezuela, Iran, Ukraine? What's going on in these cities with ICE? What's going on with China? It doesn't fix them blocking our high-end chip stocks that go in from NVIDIA and everybody else. How's it going to fix our U.S. deficit? Can you imagine this? $1.8 trillion. That is insane. The insane part is, as I said a moment ago, it's 5% of our GDP. That's insane. Insane. You can't survive with that. For 50 years, it's been 3.8% of GDP. And these tariff worries, when you get into fights with, you're gonna tack on 8 nations, more tariffs and all. This is tough. So what you do is follow me, my gang membership, just follow us and we'll help you with shorting. You got to learn how to short.